Hello traders, you're welcome back to the Forex Geek channel. If you're looking for a way to simplify your day trading strategy and make quicker, more precise decisions, then you are in the right place. In this video, we are going to be diving into a powerful but often overlooked strategy, which is the Heiken Ashi and 50 EMA combination. Now, this might just be the best kept secret in day trading. And if you stick with me till the end, I'll show you how these two indicators can completely change your trading approach. Before we jump in, make sure you like the video and subscribe to the channel so you don't miss out on more trading tips and strategies. Now, let us start by breaking down the first component of this strategy, which is the Heiken Ashi strategy. So I'm going to be adding the Heiken Ashi indicator to the chart. Okay, so this is how the Heiken Ashi indicator looks like. Okay, if you are new to Heiken Ashi, it's a type of candlestick chart that gives you a smoother view of price action. Unlike regular candlesticks, Heiken Ashi candles use a modified formula for the open, high, low, and close prices. What is the result? You have fewer wicks, you have more clarity, and you have a much easier time identifying trends. So when the market is moving up, you will see a series of white candles with little or no lower shadows. In a downtrend, you will see red candles with little or no upper shadows. All right, so this makes it much easier to spot trends at a glance, reducing the noise that regular candlesticks often show. In a nutshell, Heiken Ashi smooths out the price data, helping you avoid being misled by sudden price fluctuations. This is crucial for day trading where quick, clear decisions are key. So now let us talk about the second piece of the puzzle, which is the 50 EMA, the 50 period exponential moving average. All right, we're just going to change this to 50 and we're going to use the exponential EMA method for this. All right. So the EMA is a type of moving average that gives more weight to recent prices, making it more responsive to market changes than the simple moving average. The 50 EMA particularly is popular among day traders because it helps highlight the medium-term trend. It is perfect for identifying the overall direction of the market, and if the price is above the 50 EMA, it's generally considered an uptrend, while if the price is below the 50 EMA, it indicates a downtrend. So by combining the 50 EMA with the Heiken Ashi, you are going to get a clearer view of the market direction, and you'll be able to filter out noise and false signals. So how do we combine these two indicators for a winning strategy? Let us just walk through the steps for both buying and selling using the Heiken Ashi and the 50 EMA strategy. So the first step is to identify the trend with the 50 EMA. First of all, you check where the price is in relation to the 50 EMA. If the price is above the 50 EMA, the market is in an uptrend. All right. If the price is below the 50 EMA, then the market is in a downtrend. So this gives you the direction of the market and helps you focus on the right trades. For example, if the price is above the 50 EMA, you'll focus on buying opportunities. If the price is below the 50 EMA, you'll focus on selling opportunities. The next step is to confirm the trend with Heiken Ashi candles. Once you know the trend direction, you look for Heiken Ashi candles that confirm the trend. So in an uptrend, you'll see a series of white candles with little or no shadows. All right. In a downtrend, you are going to find a series of red candles with little or no upper shadows. For instance, if the price is above the 50 EMA and the Heiken Ashi candles are white, that is a solid confirmation that the trend is up. And conversely, if the price is below the 50 EMA and you notice that the Heiken Ashi candles are red, that is a strong confirmation that the trend is down. All right. So in an uptrend, you'll be looking for buy opportunities, and in a downtrend, you'll be looking for sell opportunities. Okay. Then finally, you have to wait for the trend confirmation. Okay, the trend continuation. Actually, one of the key advantages of this strategy is that it helps you to avoid entering too early. All right, you want to wait until the Heiken Ashi candles are fully aligned with the trend, which reduces the risk of entering during a temporary retracement, because patience is key. So if you see a white candle forming above the 50 EMA, that could signal a buy opportunity. On the flip side, if you see a red candle forming below the 50 EMA, you might want to enter a sell trade. Now let us talk about exits. You want to exit a trade when the Heiken Ashi candles start to show signs of a reversal. All right, for example, let's say you are in a buy trade and the candles turn red. It could be a sign that the uptrend is losing momentum. Similarly, if you are in a sell trade, right, and the candles turn white, it's time to consider exiting the sell trade. You can also use the 50 EMA as a dynamic exit point. If the price crosses the 50 EMA in the opposite direction of your trade, that could be an additional signal to exit. Let's say you're in a buy trade and then suddenly you see that price just jumped below the 50 EMA. So that's the time to manually exit your buy trade. On the other hand, you are in a sell trade and then you notice that the price has broken above the 50 EMA. It could be a time to manually exit your sell trade. Or if you want to use automatic exit, you can just use resistance levels to set your take profits, and you can use support levels to set your take profits. Resistance levels could be good areas to set take profits for your buy trade, while support levels could be good areas to set your take profits for a sell trade. Okay, so for day traders, this strategy is especially useful because it helps filter out the noise of smaller price movements and focuses on the overall trend. The 50 EMA keeps you aligned with the bigger picture, while the Heiken Ashi candles give you precise entries and exits. So by using these two indicators together, you'll have a much clearer view of the market's direction, allowing you to make faster and more confident decisions. Okay, so is the Heiken Ashi and 50 EMA strategy the best kept secret in day trading? It certainly has the potential to be. This combination helps you identify trends, reduce market noise, and enter and exit trades with greater confidence. It's a simple yet powerful strategy that's easy to understand and perfect for day traders looking to streamline their process. So if you found this video helpful, make sure to like it and subscribe to the channel for more trading strategies and tips. Drop any questions or comments below. I'd love to hear what you think about this strategy. Thank you for watching and happy trading. See you in the next video.